Good morning, friends. We'll continue with our discussion on standard costing. Today, being a fully live online session, in case I get disconnected in between because I'm connected from home, send me a message in WhatsApp because I'm not sure if I'm checking this or whether I'm aware that I'm connected or not connected. So, in case I get disconnected and you're not able to hear me, do send me a message in WhatsApp if I don't connect back in a few minutes. We were doing area of overhead variances. There's only one homework which was there, a fairly simple question. So I'll quickly discuss that homework first. Homework was, I think, question number 29. From the following cost data, calculate the fixed overhead variances. Question is clearly given actual days as well as budgeted days. So this is a problem with calendar variance. In that, this is BFOH, this is AFOH, SR into SH, SR into AH, and SR into PH. These are the three things we need to complete. SR per hour is equal to this 1,60,000 divided by 20 into 8,000. Number of working days into man hours per day. 20 into 8,000, that will give you 1. And 20 into 8,000 into 1 will give you technically something called as budgeted output. Budgeted hours is 20 into 8,000. Budgeted output is 20 into 8,000 into 1. Actual hours is 20 into 8,400. Actual output is 20 in 22 into 8,400 into 0.9. 22 into 8,400 is actual hours. 22 into 8,400 into 0.9 into 0.9 is the actual output. So you get the actual output, you get the actual hours, get the PFOH, and then complete it. Any doubts on this question? Anybody has any doubts on this question? Just give me a minute. Any doubts on this question? Okay, we'll proceed ahead. Go through 33. Sorry, go through 33. Okay, a manufacturing concern has provided the following information relating to fixed overheads: particulars, standard and actual, output in a month, working days in a month, fixed overheads. As I said in the previous session, if the question gives you a standard that is not technically a standard, that is technically a budget. So this is budget output, budgeted working days, budgeted fixed overheads. We have budgeted output, budgeted working days, budgeted fixed overheads. It is not to be interpreted as standard. So whatever information is given in the question, that refers to budget. They've asked for fixed overhead variance, which is fixed overhead cost variance, fixed overhead expenditure variance, fixed overhead volume variance, fixed overhead efficiency variance. These are the requirements. They have not technically asked for calendar variance and capacity variance. Few variances have not been asked in the question. Doesn't really matter. We'll try to do all the variances, or at least put the computation table. Let's start with the computation table. This is with calendar variance. This is with calendar variance. SR, SH, AH, PH, BH, The outer part is AFOH. This part is called expenditure variance. This was your efficiency, capacity, calendar put together is volume. Efficiency, capacity, calendar put together is the volume. Put the chart first. Every problem will try to put the chart first. The question has information on actual days as well as budgeted days. When both are available, it is with calendar variance. It has information on both. Efficiency, capacity, calendar. Let's start with the computation table. SR into SH or SR into AO, SR into AH or SR into SO, PH, PO, PFOH, BH or BO or BFOH and AFOH. This is what will come in our computation table. SR into SH or SR into AO, SR into AH or SR into SO, SR into PH or PO or PFOH, SR into BH or BO or BFOH, and actual fixed over it. Actual fixed over it. 5 items in the note. Note. Point number 1. SR per SR per unit is equal to SR per unit is equal to BFOH by budgeted output. Budgeted fixed overhead by budgeted output. SR per unit is equal to BFOH by budgeted output. That again I'm repeating, it is not standard, it is only budget. What is given in the question has to be interpreted as only budget. So 5 lakh divided by 5,000, 100 per unit. 5 lakh by 5,000, 100 per unit. SR per unit is equal to 5 lakh by 5,000, 100 per unit. 100 per unit. We do not have data on number of hours in this question. There is no information relating to number of hours in this question. So in this problem, we cannot calculate SR per hour. SR per hour is not possible because information relating to that is not available in the question. So we have calculated SR per unit. Let's start coming to the computation table. First one is 100 into 4,800. Actual output is 4,800. 100 into 4,800. 100 into 4,800. Use this. Second one, I don't know the actual hours or standard output. What is given in the question is not standard output. What is given in the question is budgeted output. What is given in the question is not standard output. What is given in the question is budgeted output. So we do not have information on something called as SO as of now. What needs to be done? We'll see it later. Point number B, computation of PFOH. Computation of PFOH. Computation of PFOH. 25 days equal to 5 lakh. 25 days equal to 5 lakh. 23 days equal to question mark. 25 days equal to 5 lakhs. 23 days equal to question mark. Equal to question mark. So you get 23 days equal to 4,60,000. 4,60,000. 460. BFOH is 5 lakh. FOH is 490. Only thing which is missing as of now is SR into SO, or technically SR into AH. That part alone is missing. SR into SO or SR into AH part is missing. Okay, now we are going to make one assumption. I'll first explain the assumption I'm taking, and that's what ICA has done. Listen for some time. It is assumed that actual hours is equal to possible hours. Actual hours is equal to possible hours, and there is no capacity underutilization. There is no capacity underutilization. There is no capacity underutilization. Hence, SR into AH is equal to SR into PH of rupees 4,60,000. I don't know what is SR per hour. Let's not be worried about that. We are making an assumption that in this question, if you see, capacity variance is not asked. The reason for that is I have to make such an assumption. If I don't make an assumption, I'll not be able to close the question. They have not asked for capacity variance, but they've asked for efficiency variance and all. So we are making an assumption that SR into AH is equal to SR into PH. That is, in the company, we have worked for whatever possible hours, or we have produced whatever is possible output. In short, SR into AH or SR into SO is equal to SR into PH or SR into PO or PFOH. That's an assumption we are taking, and if once you take this assumption, capacity variance will become zero. Question as such has not asked for capacity variance, but they've asked for efficiency variance. For efficiency variance, I need the second column. For overhead variance, I don't need the second column. Expenditure, I don't need it. Volume, I don't need it. But efficiency variance, we will need column 2. We will need column 2. So we are making an assumption that there is no capacity underutilization or overutilization. Write this note and I copy paste this. is assumed that actual hours is equal to possible hours. There is no capacity underutilization. No capacity underutilization. I hope this is clear. We'll start calculating the variances. As I've said, I'll not focus much on the variance calculation, but let's do whatever is asked. Fixed overhead cost variance is equal to, or technically fixed overhead variance. That is what this question is asking. The term fixed overhead variance is fixed overhead cost variance. SR into SH minus AFOH. 4 lakh 80 minus 4 lakh 90. 10,000 adverse. 480 minus 490. 10,000 adverse. Fixed overhead expenditure variance. Fixed overhead expenditure variance. SR into BH minus AFOH. 5 lakh minus 4 lakh 90. 10,000 favorable. Fixed overhead expenditure variance 10,000 favorable. Fixed overhead volume variance SR into SH minus BFOH, or technically SR into BH. 480 minus 5 lakh. 20,000 adverse. And fixed overhead efficiency variance SR into SH minus SR into AH. 480 minus 460. 20,000 favorable. Cost, expenditure, volume and efficiency. Cost variance, expenditure variance, volume variance and efficiency variance. I'll wait for a minute. Let me know if there is a doubt. Formula part, I don't want to really explain much. If there are still doubts, we can take it up. Any doubts on this?
No doubt, sir.
Okay. ठीक है. Let's proceed ahead. The question has all the variances, but technically I just needed the efficiency. Capacity and a calendar is not needed. Capacity is turning out to be zero because of that assumption. We have taken an assumption. Otherwise, the efficiency we cannot calculate. 34 is homework. Go through 35. Okay, SJ Limited has furnished the following information. Standard overhead absorption rate per unit. Now, very important word. This is overhead absorption. They have not mentioned whether it is fixed overhead or variable overhead. So, understanding is it's both put together. That is fixed overhead absorption as well as variable overhead absorption put together is 20 rupees. Standard rate per hour, both put together. Budgeted production, actual production. Actual overheads were 2 lakh 95, in which 62,500 is fixed. Actual hours. Overheads are based on the following flexible budget. You are required to calculate the overhead variance on hours basis. Specific requirement is in our computation table, we will have to use the hours basis. That is, you will have to use SR into SH. You should not use SR into AO. Both are same only, but specific requirement is to use on hours basis. So we will have to do SR into SH, SR into AH, and not SR into SO. So that is a specific requirement. We are required to calculate variable overhead efficiency expenditure, fixed overhead efficiency, and capacity variance. Okay, first we'll do both of the computation table. That's the always starting part. So let's get into first variable overhead variances. Working note 1, computation of VOH variances. Computation of VOH variances. SR into SH, SR into AH, AR into AH. Technically, this is AVOH. SR into SH, SR into AH, AR into AH is technically actual variable overhead. Actual variable overhead. Okay. As we do any problem, the starting part is always getting standard rate per hour and per unit. Per unit is not needed in this question because our calculation has to be on per hour basis and not per unit basis. Now the problem for me is they have given this 20 rupees. This is standard overhead absorption rate. Overhead absorption rate would mean fixed and variable put together. Standard overhead absorption rate would indicate fixed as well as variable put together. Standard rate per hour will also indicate variable and fixed put together. So this 20 rupees, I will have to split how much is variable, how much is fixed. 4 rupees, how much is variable, how much is fixed. Basically, I anyway don't need this, but ठीक है, because I want the standard rate per hour only. So standard rate per hour is 4 rupees. In that, how much is variable component, how much is fixed component is what we need to analyze. Any idea how do I start this? What can be the starting part? How do I bifurcate this 20 and 4? How can we get standard rate for variable overhead and for fixed overhead? Any idea? Anybody, any information, or how do we go about? Participate, right, wrong doesn't really matter. How do I get variable cost per unit or per hour? You are aware of what needs to be done. So participate, please. Variable cost per unit. How will you calculate variable cost per unit if this data is given 8,000, 10,000, 14,000? Overhead cost 180, 210, 270. How will you get variable cost per unit? What is the formula? Guys, please.
Change in total cost divided by change in units.
Yeah, I'll use that formula. Moment I use that formula, I'll get the variable cost per unit. So you will know the bifurcation of 20, which is not needed, but that will help me in bifurcating 4 also. Now come down, note point number 1. VC per unit is equal to our variable overhead per unit is equal to change in cost by change in units. Change in cost by change in units. Change in cost by change in units. Any two levels we can take. 2,10,000 minus 1,80,000. 10,000 minus 8,000. 15 per unit. Variable overheads is 15 rupees per unit. Variable overhead is 15 per unit. Point number 2. Overhead absorption rate per unit equal to 20. Bifurcation. Variable overhead 15. Fixed overhead 5 rupees per unit. I don't need per unit, I need per hour. Variable overhead 15. Fixed overhead 5 rupees. Fixed overhead 5 rupees. Similar thing, OAR per hour is equal to 5. OAR per hour is equal to, not sure, 4. OAR per hour is equal to 4. OAR per hour is equal to 4. Breakup of that is VOH FOH. If 20 is bifurcated as 15 and 5, if 20 is bifurcated as 15 and 5, 15 and 5, 4 will be bifurcated as 3 and 1, because in place of 20 rupees per unit you have 4 rupees per hour. In place of 20 we have 4, so 20 is equal to 4, 15 is equal to 3, 5 is equal to 1. 15 is equal to 3, 5 is equal to 1. So OAR per hour is equal to 3 rupees and 1 rupee. OAR per hour. Variable overhead per hour is 3 rupees. Fixed overhead per hour is 1 rupee. Variable overhead per hour is 3 rupees. Fixed overhead per hour is 1 rupee. This is I cannot use this in the question because question specifically told follow hours basis. That is, that conversion factor we cannot use. 3 rupees and 1 rupee is the overhead absorption rate. Variable is 3 rupees. Fixed is 1 rupee. Any doubts? I assume you're done with this. So P into, we don't know the hours, we'll see. P into P is the standard rate. Standard rate per hour is 3. Actual variable overhead is 2,95,000 minus 62,500. Actual overhead is 2,95,000, out of which 62,500 is fixed. So 2,95,000 minus 62 500, 232 500, 232 500, 232 500. Actual hours is 74,000. Actual hours is 74,000. 3 into 74,000, that's the actual hours. And coming to SR into SH, coming to this part of SR into SH, I would have easily done SR into AO. I would have easily done SR into AO. What is SR into AO? Is 15 into 15 560. 15 rupees per unit into 15 560. Question specifically says do it on the basis of hours. So I'll have to calculate standard time. Any idea what is the standard equation in this question? How many units is equal to how many hours? What is the standard equation? It's given in a hidden manner. Try it. I'll explain in a minute or two if you cannot get it. How many units is equal to how many hours? How many units is equal to how many hours? Any idea? Okay, right. Standard time. Computation of standard time. SR into SH is equal to SR into AO. SR into SH is equal to SR into AO. SR into AO. P into SH is equal to 15 into P into SH is equal to 15 into 15 560 units. This will give us SH. P into SH is equal to 15 into 15 560 units. 15 into 15 560 units. I cannot use SR into AO, otherwise I would have preferred directly using that itself. 3 into SH is equal to 15 into 15 560 units. SH is 77,800 hours. 77,800 hours. P into SH is equal to 15 into 15 560. SH is 77,800. We will answer whatever variances are asked in the question, not all. I'm not going to do all variances now onwards. Let's just focus on what is asked in the question. Any doubts on SH computation? Okay. Variable overhead efficiency variance, whatever is asked in the question. efficiency variance is equal to SR into SH minus SR into AH. 233,400, 2,22,000, 11,400 favorable. 233,400 minus 222, 11,400 favorable. Variable overhead expenditure variance SR into AH minus AVOH 2,22,000, 232,500, 10,500 adverse. 2,22,000 minus 232,500, 10,500 adverse. Efficiency and expenditure. 11,400 favorable, 10,500 adverse. This is on VOH variances. FOH is going to be very simple now because you already know the SH, you already know the AH, you also know what is SR per hour and what is SR per unit. Per hour is what we are going to use. Where is SR per hour is this? 1 rupee and 5 rupee. 1 rupee and 5 rupee is the SR per hour and SR per unit. 1 rupee and 5 rupees. 1 rupee and 5 rupee. SR per hour for fixed overhead is 1 rupee. Per unit is 5 rupees. Next, working note 2. Computation of FOH variances. FOH variances. SR into SH, SR into AH. This question is without calendar. Without calendar, we do not have data on actual days and budgeted days. SR into SH, SR into AH, SR into BH, and AFOH. SR into SH, SR into AH, SR into BH, and actual fixed overhead. Actual fixed overhead. Actual fixed overhead. One into 77,800. One is coming from that earlier table, earlier chart. 77,800 is copy pasted. 1 into 77,800. There it is 3 into 77,800. Here it is 1 into 77,800. 1 into 77,800. 1 into 74,000. 1 into 74,000. SR into BH is equal to SR into BO. SR into BH is equal to SR into BO, budgeted output. I don't have the budgeted hours, I have the budgeted output, which is 12,000. I'm calculating it now. SR into BH is equal to SR into BO. 1 into BH is equal to 5 into 12,000. 1 into BH is equal to 5 into 12,000. 5 into 12,000. 5 into 12,000. BH is equal to 60,000. 5 into 12,000. BH is equal to 60,000. 1 into 60,000. 1 into 60,000. And AFOH is 62,500. We will answer what is asked in the question. I'm not getting into all variance calculation. I'll just restrict myself to two variances which are asked. Not get into all variance computation. Just focus on two variances which are asked. Any doubts on the table? The most important part was splitting the 20 as 15 and 5 and 4 as 3 and 1. Beyond that, it's just a formality. Once that split was done, beyond that, it is more of a formality. Fixed overhead efficiency variance is equal to SR into SH, SR into AH, 3800 favorable. Capacity variance is equal to SR into AH minus SR into BH, 14,000 favorable. Efficiency 3800 favorable. Capacity 14,000. I hope this is clear.
Yes, sir.
Okay. I'll proceed ahead. In case you're still doing, let me know. I'll wait. Anybody still doing, let me know. I'll wait. You can type it in the chat box as well. If you're doing, let me know. I'll wait. Otherwise, I proceed ahead. Okay. I assume you're done. Go through 36 in a very good problem. Go through 36. Okay, I'll start first explaining the question. In a manufacturing unit, standard unit of the production were fixed at 1 lakh 20. Nobody can fix what is standard production because standard always depends on actual. Standard always depends on what is the actual performance. So this is not standard. This is budgeted. This is budgeted. The reading of the word has to be very clear. Standard unit of production for the year. You cannot fix a standard for the year. That is budgeted production for the year. Overhead expenditure is 12,000, 6,000, and I have this new headache which is a semi variable cost. Actual production during April is 8,000, that is AO. Each month has 20 working days. Budgeted days is 20. During the month, there was one statutory holiday. So, budgeted days is 20. Actual days is 19, one day holiday. Budgeted days is 20. Actual days is 19, one day holiday. Actual overhead amounted to fixed, variable, semi variable. The new element in this question is we have the semi variable cost. Semi variable charges are considered to include 60% of fixed and 40% of variable. First thing what I'm going to do is I'm going to remove the semi variable from the question because I don't want the semi variable cost because we do not calculate semi variable cost variances. Either we have a fixed overhead variances or variable overhead variances. If it is a semi variable cost, you'll have to split that into variable and fixed, and the question has done that and given. They have mentioned that 60% of the cost is fixed, 40% of the cost is variable. So first thing what I'm going to do is I'm going to remove this 1800 and 192 from question. Working note 1, computation of fixed cost and variable cost. Computation of fixed cost and variable cost. Fixed cost and variable cost. Budgeted fixed cost is equal to overhead expenditure were estimated is budgeted 12,000 plus 60% of 1,800, 60% of 1,800. This also 13,080 per year, or I'll do per month also because we are doing calculation for April. 13,080 per year, or divide by 12, 1090 per month, 1090 per month. 13,080 per year or 1,090 per month. We are removing that semi variable from the question. Budgeted variable cost is equal to 6,000 plus 40% of 1,800. 6,720 per year, or 6,720 per year, or 560 per month. 6,720 per year or 560 per month. 560 per month. Budgeted fixed cost 1090 per month. Budgeted variable cost 560 per month. This is on the budget side. Let me close it even on the actual side. Actual fixed cost of April equal to actual fixed cost of April equal to 1190 plus 60% of 192. 1190 1305.2, 60% will go to fixed. Actual variable cost of April 480 plus 40% of 192, 556.8. 1305.2, 556.8. 1305.2, 556.80. Budgeted fixed cost, budgeted variable cost, actual fixed cost, actual variable cost. With this, we can then start doing all calculation. But till this, I wanted to first do that calculation of that 60-40, put fixed 60, variable 40. Now coming to the variances, let's first look at what variances have been asked. Overhead cost variance. What is overhead cost variances? Fixed overhead cost plus variable overhead cost variance. What is overhead cost variances? FOH cost variance plus VOH cost variance. In variable overhead, only cost variance is asked. They have not asked for expenditure or efficiency. Breakup is not asked. Only the cost variance have been asked. In fixed overhead, cost, volume, expenditure and calendar. So multiple variances have been asked. Fixed overhead cost plus variable overhead cost is overhead cost variance. Fixed overhead cost plus variable overhead cost is overhead cost variance. Computation of VOH variances. First we will do VOH, we will do FOH. VOH cost plus FOH cost is the overhead cost variance, both put together. Computation of VOH variances. Star into SHR, star into AO, SR into AH, R, SR into SO, AR into AH, R, AVOH. SR into SH or SR into AO, SR into AH or SR into SO, AR into AH or AVOH, AR into AH or AVOH. AVOH. Point number A. We normally do SR per unit and SR per hour. Per hour is not possible in this question. As I was saying earlier, some question per unit will be possible, some question per hour will be possible. Per hour is not possible because question has not given how many hours and all. Only units are given. Only units are given. So point number A, star per unit is equal to budgeted variable overheads by budgeted units. Budgeted variable overheads by budgeted units. 6720 for a year. 6720 for a year divided by 1,20,000 for a year. 6720 for a year divided by 1,20,000 for a year. 0.056 per unit. 0.056 per unit. SR per unit is equal to budgeted variable overhead by budgeted units 6720 by 1 lakh 20 0.056 per unit 0.056 per unit 0.056 into 0.056 into 8,000 units 0.056 into 8,000 units into 8,000 units SR into AO 0.056 AO is 8,000 SR into SO is not possible unless I take an assumption. Why not possible? Because standard output will have to be computed with the help of actual hours. I don't know the actual hours. I don't know the standard output. First line of the question says standard production, that is budgeted. Second thing, I don't need it also because question has asked only for variable overhead cost variance, which is the first rectangle minus the last rectangle, or the first column minus the last column. So I cannot calculate it as one point. I also don't need it as the second point. If I needed it, I would have taken an assumption. In this question, we took an assumption for calculating SR into SO. We took an assumption saying that it is equal to PFOH. Here I can say that SO is equal to AO or BO, some assumption I can take. But anyway, I don't need it. I don't need it because it's not required in the question. They have not asked us the breakup of expenditure and efficiency. So I'm not getting into this. AVOH is already done by us, which is 556.8. So let's just get the variable overhead cost variance. Only the variable overhead cost variance is needed. You can say not possible, not needed, whatever name you want to give. Because it's not needed, I'm not taking an assumption on standard output. The first line says standard output is fixed for the year. You cannot fix a standard output for the year. That is the budgeted output. Only thing we want is VOH cost variance is equal to SR into SH minus AR into AH. One zero 108.8 adverse. 108.8 adverse. This is on variable overhead variances. Then we'll move to computation of fixed overhead variances. Once fixed overhead variances are done, VOH cost plus FOH cost both put together, VOH cost variance and FOH cost variance both put together will give the overall cost variance, that is the overhead cost variance. Now this question has actual days as well as budgeted. What is budgeted is 20 days. Actual 1 day lesser. Actual is 1 day lesser, which is 19. 20 vis-a-vis 19. 20 vis-a-vis 19. SR into SH or SR into AO, SR into AH or SR into SO. You can do the chart if you want. SR into PH or SR into PO or PFOH, SR into BH, SR into BO or BFOH and AFOH. As we do, we'll first calculate SR per unit. Per hour is not possible. Question doesn't have any information on number of hours. It's only number of units. So first we'll calculate SR per unit and then come back to the other items. So point number A, SR per unit is equal to budgeted fixed overheads by budgeted units 13,080 by 1,20,000. 0.109 per unit. 0.109 per unit. 0.109 into 8,000. 0.109 into 8,000. Not possible. I don't have the actual hours or standard output. I don't have actual hours or standard output. 0.109 into 8,000 into 8,000. AHRSO is not available. AHRSO is not available. Computation of PFOH. 20 days is equal to 20 days is equal to 1090. This is the budget. 20 days is equal to rupees 1090. 20 days equal to 1090. That's the budget. 20 days equal to 1090. 19 days equal to question mark. 20 days equal to 1090. 19 days equal to question mark 1035.5. 20 days 1090. 19 days 1035.5. 1035.5. 20 days is 1090. 19 days is 1035.50. 1035.50. 1090. Actual is 1305.2. Start calculating the required variances. I'll wait to keep calculating the required variances. Finally, overhead cost is fixed overhead cost variance plus variable overhead cost. Just calculate what is asked in the question. Few variances like FOH efficiency, FOH capacity and all you cannot calculate. That is why they have not asked. They have not asked for all variances. Few variances cannot be calculated. Few variances cannot be calculated. So start calculating what is asked. Calculate the variances. Whatever is asked in the question, not everything. You should be in a position to do all these calculation. In class also I've seen you guys will wait for my instruction. Please keep doing on your own. Just formula application. And finally, once all this is done, overhead cost variance is FOH cost variance plus VOH cost variance. We'll have to add them together. That is the overall cost variance. FOH cost variance plus the VOH cost variance. Put together is 542 adverse. 542 adverse. FOH cost plus VOH cost variance. Any doubts on this? Any doubts on this? I hope you're done. In case anyone is still doing, let me know. I hope it is done. If you're still doing, please let me know. I'll wait. Anyone still solving this?
No, sir.
Okay. Okay, let's proceed then. Go through 37. Okay. Slightly a different question. XYZ company has established the following standards for factory overheads. Variable overhead per unit, that is SR per unit for variable overheads 10 rupees. Fixed overheads per month 1 lakh. Capacity of the plant is 20,000. So indirectly fixed overheads per unit is 5 rupees. 1 lakh by 20,000. Fixed overheads per unit, variable overheads is 10 rupees, fixed overheads is 5 rupees. Actual data is as follows: overhead incurred, output, calculate production volume and overhead expense variance. Now there is one challenge in this question. The challenge we have in this question is, I don't know what is the breakup of 3 lakh. We don't know what is the breakup of 3 lakh. How much in this 3 lakh is fixed? How much is variable? This is one unique question which is there. IC has tested this once. They've asked for production volume. Volume is very simple. Volume means FOH volume variance. You do not have variable overhead volume variance. Overhead expense can be variable overhead expense as well as fixed overhead expense. So I don't know the breakup. When you don't know the breakup, how can we do it is what we are going to see in this question. Volume variance is only FOH volume variance, but overhead expense variance will indicate fixed as well as variable. Now, right, production volume variance, production volume variance exist only for production volume variance exist only for fixed overheads, only for fixed overheads and hence this is FOH volume variance. Hence this is FOH volume variance. We'll write the word whatever is it. Production volume variance is equal to SR into AO minus BFOH. This is what the formula used to be. SR into AO minus SR into SH it used to be, but I don't have SH here. I have only AO. SR into AO minus budgeted fixed overhead. Minus budgeted fixed overhead. SR is 1 lakh by 20,000 5. 1 lakh divided by 20,000 units 5 per unit. 1 lakh divided by 20,000 units 5 per unit. So 5 into 15,000 minus 1 lakh 25,000 adverse. 5 into 15,000 minus 1 lakh 25,000 adverse. 5 into 15,000 minus 1 lakh 25,000 adverse. That's the production volume variance. Next is overhead expense variance. We don't know the breakup between variable and fixed. That's the biggest challenge in this question. We don't know how much is variable overhead, how much is fixed overhead. Without that breakup, it becomes slightly tricky. So what we are going to do for overhead expense variance is standard expenditure minus actual expenditure. Standard expenditure minus actual expenditure. Standard expenditure minus actual expenditure. Standard expenditure, leave some two lines gap to calculate variance. Standard expenditure, as I've said, any variance is the difference between standard and actual, is computed with the help of actual output. Standard expenditure is computed with the help of actual output. Standard expenditure for 15,000 units is equal to, that is how much you should incur for 15,000. How much you should incur for 15,000 units is what we are trying to calculate. What should be the expenditure for 15,000 units is equal to 15,000 into 10 plus 1 lakh. Fixed overheads do not change with volume. 15,000 into 10. This is what I should incur. What I have incurred, we know the gap is the overhead expense variance. 2,50,000. Actual expenditure breakup is not known. That is why we are clubbing them together. Actual is 3 lakh. 50,000 adverse. 250 minus 3 lakh. 2,50,000 minus 3 lakh. 50,000 adverse. 250 minus 3 lakh. 50,000 adverse. 50,000 adverse. We cannot, what to do is split this into how much variable, how much fixed and all is not possible because you don't know the breakup of actual. We did a problem like this earlier also where they gave the breakup actual overheads 2 lakh 90 in which variable is how much, fixed is how much. That breakup was there. Here the question has not given the breakup. If the breakup was given, we will do separately for fixed overhead, separately for variable overhead. 38 is homework. 39 is also homework. 38, 39 both are homework. Okay, I'll give a break now. The break is slightly longer. That is, normally we take a 10-minute break. I'm giving you a 15 minutes break. In that 5 minutes, please spend in revising all charts because I'll be moving to comprehensive question after the break. In comprehensive question, we will do material variance, labor variance, variable overhead variance, fixed overhead variance, all variances in a single question. So I would want you to revise your charts. So I'm giving a 15 minutes break. In this break, whatever time you want to rest, and then please go through all the charts. I hope you have gone through all the variances. I'll just summarize that once. Material variances had two situations: single material, multiple material. Single material will have three columns: SP into SQ, SP into AQ, AP into AQ. Material cost variance, price and usage. Two material will have SP into SQ, SP into RSQ, SP into AQ, AP into AQ. Material cost split into price and usage. Usage split into mix and yield. Then labor variances: single labor without idle time, SR into SH, SR into AH, AR into AH. Cost variance split into rate and efficiency. Then we have with idle time: SR into SH, SR into AHW, SR into AHP, AR into AHP. The main variance is called labor cost variance, split into efficiency, rate and idle time. Then we have multiple labor without idle time: SR into SH, SR into RSH, SR into AH, AR into AH. Where what we have is main variance is called labor cost split into rate and efficiency. Efficiency part is split into mix and yield variance. And then with idle time: SR into SH, SR into RSH, SR into AHW, SR into AHP, AR into AHP. Main variance is called cost split into your rate variance, idle time variance and efficiency, which is split into mix and yield variance. Variable overhead only one situation: SR into SH, SR into H, AR into H. Cost variance, expenditure variance, efficiency variance. Fixed overhead we had two situations where one is with calendar, one is without calendar: SR into SH, SR into AH, SR into BH and AFOH, or SR into SH, SR into AH, SR into PH, SR into BH, and finally you have something called as AFOH. Main variance is called as your cost variance split into expenditure and volume. Volume can be split into efficiency, capacity and calendar. Now in comprehensive variances, my focus would primarily be on getting the computation table. Getting the variance will not be my focus area. I'm making it very clear because indirectly we are just going to do revision of what we learnt earlier. There is only one new concept will come, one variance called material purchase price variance. That also I could have touched upon earlier at any place, but I didn't. So I'll do that alone here. Otherwise, it is just a revision. So we are going to technically do revision of what we have done till now. Let's come to question 40. Z Limited uses standard costing system in manufacturing its single product M. The standard cost per unit of M is as follows. This is a very powerful data. When you read this, you'll have to read it like this. Material 2 meters at 6 per meter. 6 is the standard price. 2 is to 1 is the input output ratio. Direct labor 1 hour equal to 1 unit is the standard equation, and 4.40 is the SR. Variable overhead 1 unit equal to 1 hour. SR per hour is 3. SR per unit is also 3. Everything will be readily available. Direct material acquired means purchased. Material consumed. Direct labor, they want the breakup of number of hours and rate per hour. This is the actual data. Variable overhead 2475. Variable overhead efficiency is 1500 adverse. Variable overheads are based on DLH. No stock of material in the beginning. Compute the missing figures and work out all relevant variances. Again, I'm repeating, I am not going to do variance calculation. I will focus only on the three computation table. One computation table for material variance, one computation table for labor variance, one computation table for variable overhead. In that, those two question marks will also get calculated. Let's start. Working note 1, computation table for material variances. Again, I'm repeating, it is like a revision now. We have got to the revision part of standard costing. Computation table for material variances. It is a single material problem, so three columns. SP into SQ, SP into AQ, AP into AQ. At home you can do the variance calculation and all, but my focus would only be primarily on getting the computation table. In the class we just focus on getting the computation table. SP is directly given 6 per meter. First we fill price, then quantity in the reverse order. 6 is the standard price. Actual price is 5.7. Actual quantity 12670. 12670 is the material consumed. Material consumed is 12670. SQ is equal to actual output into input by output. Actual output into input by output. I'm technically doing revision of what we did earlier. AO into input by output. Into input by output. AO is 6000 units. Input output ratio is 2 meters per 1 unit. 12,000 meters. Standard quantity is 12,000 meters. According to me, this table is over. Material variances you can do at home. Calculation of variances is something you can spend time at home after the class, that is outside the class hours. Material variances table is done. I'll then move to the next one. Computation table for material variances is done. Sometimes you will get stuck at few tables. What to do, you'll understand. Material variance table is done. Computation table for labor variances. Labor variances. Single labor without idle time. SR into SH, SR into AH and AR into AH. SR into SH, SR into AH and AR into AH. Standard rate per hour from that table is 4.40. 4.40. SR per hour is 4.40. SR per hour is 4.40. Actual rate, what has happened is they have given this breakup. I don't know, but question wants us to calculate the breakup. We'll see later, but they want the breakup from us in this question. Otherwise, I would have told I'm not getting the breakup also because I just need that item. So direct labor, last column is 27,950. Breakup we will see. Breakup we will see. We have to calculate what is AR, what is AH. That breakup part we'll see later what we can do. SR into AH, actual hours I can get only once I get that breakup. Breakup is still missing. I don't have the breakup in the question. How do we get to the breakup? We'll see. SH is computation of SH. Standard equation. Standard equation. Standard equation. Every time just focus on the table. Table will tell you this table. That is the standard cost sheet. Most of the question cost sheet would be given 1 hour equal to 1 unit. 1 hour equal to 1 unit. ST equal to AO. ST equal to AO. Question mark equal to 6,000 units. ST equal to AO. Question mark equal to 6,000 units. Question mark equal to 6,000 units. Objective is to get the computation table done. 6,000 hours equal to 6,000 units. That is the SH part. 6,000 hours is equal to 6,000 units. That takes care of the standard hours part. AH I don't know. I don't have any other data to calculate AH. We'll come back to this once we are done variable overhead. In variable overhead, we may get AH that I can copy paste. As I said, in a comprehensive problem, the SH can be copy pasted from labor to variable overhead or from variable overhead to labor. That's your wish. You can do either ways. You can keep changing this either ways. So we will try for VOH variances. In case we are able to complete that, we'll be able to close this. Whenever you do this question at home or in an exam situation, once this table is done, you will calculate all variances. For labor, you can leave space. In class, I'm not saying, but in exam situation, you'll have to leave space to do the labor variances. Working note 3, computation table for VOH variances. VOH variances. SR into SHR. SR into AO. SR into SO. or AVOH. SR into SH or SR into AO. SR into AH or SR into SO. AR into AH or AVOH. AR into AH or AVOH. SR from the table 3 per hour. For direct labor it was 4.4 per hour. For variable overhead it is 3 per hour. 3 into 6,000. I'm copy pasting from the earlier SH. 3 into 6,000. 3 into I don't know the AH. We don't know the AH. 2475 breakup we'll see. 3 into 6,000. T into, we don't know the AH, 2475 is actual variable over it. 2475 is actual variable over it. There is one information in the question which is going to help us in solving this, and that information is variable overhead efficiency variance. Variable overhead efficiency variance is 1500 adverse. VOH efficiency variance is 1500 adverse. VOH efficiency variance is equal to SR into SH minus SR into AH. This will give us the AH number, VOH efficiency, and then I can copy paste this AH even to the labor part. Even to the labor variances, we can copy paste this actual R's. SR into SH minus SR into AH, 1500 negative is equal to 18,000 minus 3AH. 18,000 minus 3AH. 18,000 minus 3 actual R's. 3AH. 18,000 minus 3AH. AH is 6,500 R's. I'll split this. 6,500, and I can copy paste this for labor variances. As I said, SH and AH can be copy pasted. Any doubts on the VOH variance table? Any doubts on VOH variance table? 6,500. We put it in the table. Table is done. Variance calculation I am not doing in the session. 6,500. Break up. They wanted those two question mark. 4.3 into 6,500. So the entire table is done. We are kind of done with the requirement of the question. The requirement of the question was just to get to this table, which is done. We are done with the requirement of the question. Table part is completed. Home, later on you can do all this variance calculation. The focus is not going to be in variance computation. Focus will just be to complete the table. In case you have a doubt, let me know. In case you need some more time, then also let me know. These are the three tables. We may have to do sometimes 4 tables also. This question 3 tables. Okay, I proceed ahead. 41 will do it later. 42 as well later. Go through 43. Go through 43. Go through question 43. Okay, I'll get into the explanation part. They've asked for so many variances in the question, and there is some reconciliation also needs to be done. So let me first explain the question. Shine Star Limited company manufactures a commercial product for which the cost per unit. So this is very simple then. Material 5:1 is the input output ratio. Standard price is 4. Labor standard equation is 3 hours equal to 1 unit. SR is 10 per hour. Variable overhead 3 hours is equal to 1 unit and SR per hour is 1 rupee. SR per unit is 3 rupee. SR per hour is 1 rupee. SR per unit is 3 rupee. Fixed overhead SR per hour is 0.5. SR per unit is 1.5. SR per hour is 0.5. SR per unit is 1 rupee 50 paise. During January 2010, 600 units of the product were manufactured at the cost given below. All this is given. Flexible budget. We are required to calculate all these variances. In class, focus is just to get the computation table. Once the computation table is done, for doing reconciliation, I'll need variances, which I'll copy paste from the question only. I'll copy paste that from the question. So let's focus on getting the computation table first. Let's focus on getting the computation. Always read this data clearly. 5:1 is the input output ratio. SP is 4 per kg. Labor 3 hours equal to 1 unit. 10 per hour. Variable overhead 1 rupee per hour, 3 rupee per unit. Fixed overhead 0.50 per hour, 1.5 per unit. So almost everything is readily available. Let's start working note 1. Computation table for material variances. Single material situation. 2 minutes for you to do this. We explain the input output ratio and all. So 2 minutes for you to do this. Computation table for material variances. Computation table for material variances. 2 minutes for you to do this. Standard price is, you can check in case you have a doubt. Once you're done with the table, you can just copy paste these three variances. Let's not spend time on doing calculation. I'll need this to do reconciliation. So you can copy paste these three answer. Material cost is 2350 adverse. How it is calculated now, let me not get into it now. Material price 350 adverse. Material usage 2000 adverse. I'll need it for doing some reconciliation. Material variances table. Next, computation table for labor variances. Labor variances. Computation table for labor variances. Labor variances. Take data from the question and start doing it. 2 more minutes for you to do this. Material we did. Start doing labor variances. 1,800 hours is equal to 600 units. You can copy paste these three. Labor cost variance 2700 favorable. Rate is 1700 favorable. Efficiency is 1000 favorable. Cost, rate, and efficiency. Cost variance, rate variance, and efficiency variance. 2700, 1700, and 1000. Same table will come for variable overhead also. Same table for VOH variances. Done with labor variance. Anyone still doing it? Variance answer, just copy paste. Don't worry about that. Don't worry about the variance answers. That you just copy paste. Table is what is the critical part as of now. Focus is just getting the table. I'll be copy pasting SH and AH from there. 1 rupee per hour. 1 rupee per hour. VOH variances table. Then get the FOH variances table. I'll focus on the reconciliation part. Then we'll have to do FOH variances table. Is without calendar. Most of the data points are there in the question. 3 hours at 0.5. 0.5 is per hour, 1.5 is per unit. I'm not even trying to use the conversion factor because in a comprehensive question, a lot of data points can be copy pasted. SH, AH, all that you can take it from the earlier data. Don't look at the screen, you keep doing it. Take your time, I have no problem. Take your time. Don't look at the screen. Only the variance number I have told you to copy. Otherwise, you please do it on your own. Complete the computation table. Complete the table. I hope you're done with this. My focus would be on explaining reconciliation in this question. Computation table is something you should do. Variance is something I'm telling you to copy, because otherwise you will spend time in doing variance calculation, which I don't want to. I don't want to spend time on variance calculation. I hope it is done. Anyone still doing, let me know, I'll wait. Otherwise, I proceed ahead. Anyone still doing, let me know, I'll wait. Else, I proceed ahead. Can we?
Yes, sir.
Okay. Now we are required to do a reconciliation. See, as I said, the focus of standard costing is to find out what is the variation in profit or in cost. We have one problem which is asking for profit reconciliation, and this problem is asking for cost reconciliation. Profit reconciliation technically cannot be done unless you do sales variances, and sales variances is not part of your syllabus. So that is why ICA may not test you profit reconciliation, they'll test you only cost reconciliation. How in that question profit reconciliation is done, I'll explain that time. Now what we are trying to find is what is the standard cost and what is the actual cost. First of all, the actual cost is not 38,600. This is an error. What is it an error is? Purchase is not part of the actual cost. Actual cost is 3,500 into 4.1, which is 14,350, and total of this is only the actual cost. What you purchase is never part of the cost. What you consume is only part of the cost. Reconciliation is how much is the standard cost, how much is the actual cost, and why is there a variation happening. That is what we are trying to do. It is like when you do a BRS, you have a bank data, you have a cash data, both will give different number. So standard cost will be different, actual cost will be different. Why is that difference? The difference analysis is what we need to do. Next, reconciliation. This I'll explain in detail. Cost reconciliation. Cost reconciliation. Standard cost equal to standard is always calculated with the help of actual. Standard is always calculated with the help of actual output. So 600 units into 54.5 per unit. 600 units into 54.5. 32,700. 600 into 54.5. 32,700. Actual cost equal to actual material cost, actual labor cost, actual variable overhead, actual fixed overhead. Actual material cost, actual labor cost, actual variable overhead, actual fixed overhead, and all these data point, the last column. Actual material cost is 14,350, actual labor cost is 15,300, actual variable overhead is 1,900, actual fixed overhead is 900. Last column. So 14,350 plus 15,300 plus 1,900 plus 900. 32,450. This is where we are trying to do a reconciliation. We expected cost will be 32,700. In reality, cost is 32,450. Why is there a reduction in cost? Which variance is contributing to this reduction? It can be reduction in cost. It can also be increase in cost. Our objective is to find which variance or set of variances are contributing to this variation in cost. Next, particulars, amount. We are now doing the reconciliation. There will be multiple variances which are the reason. Particulars, amount. Standard cost 32,700. Standard cost 32,700. Add adverse variance in bracket increase in cost. Any adverse variance will lead to increase in cost. We are adding the adverse variance. Give some 5-6 lines gap. Less favorable variance. Any favorable variance is a decrease in cost. Favorable variance is good for the company, which is a decrease in cost, and adverse variance is bad for the company, which is increase in cost. Adverse is increase in cost, favorable is decrease in cost. Now what we will do is, I have the variances here. You have already written in your notebook. Listen, in the reconciliation, if you write cost variance, you cannot write these. Reason is, the cost variance is only split into price and usage. Sometimes usage can be further split. So in reconciliation, we try to make it as granular as possible. As granular means as detailed as possible. So in my reconciliation, I will not be writing cost variance because cost is further split. I will write price variance, I will write usage. Assuming usage is split into mix and yield, don't write usage. Write mix variance, write yield variance. So we will have to write only the sub variances. Now in the adverse variance, material price variance, material price variance 350 inner column, material usage variance 2000 inner column, material price 350 inner column, usage 2000 inner column, 2000 inner column. Cost cannot come. If you write cost, only cost variance can be written. Labor cost will not come. In favorable, labor rate variance 1700, labor efficiency variance 1000, rate variance 1700, efficiency variance 1000, rate 1700. Favorable, I'll subtract it because that is a decrease in cost. Adverse, I'll add it because that's an increase in cost. 1700 and 1000. VOH expenditure variance 200. VOH efficiency variance 100. Main variance will not come. Sub variances will come in the reconciliation. If you have further breakup, then write the broken down variance. Usage will not come, mix and yield will come. This is to make it finer and granular. Once this is done, I'll explain what is a utility. Cost will not come, expenditure is 0, volume will not come, breakup of that is efficiency, capacity 50, efficiency 50 and capacity 50. Adverse in the adverse side, favorable we have written in the favorable part. Adverse variances in the adverse category, favorable in the favorable. Like this, you can have any number of variances. We'll put a total of adverse variances, total of favorable variance minus, and you will get actual cost. 32,700, you should get 32,700 plus 2,600 minus 2,850. 32,700 plus 2,600 minus 2,850, 32,450. If we get this, we have done the problem correctly. If it reconciles, that is 32,450, it means we have done the problem correctly. All variances have been computed correctly. Complete this, I'll explain the utility of this. Why are we doing this item? Okay, we are done with this computation. What the utility of this is material prices adverse. I will call the purchase manager, ask him what happened. Why are we having an adverse variance? Understand the base reason. If it's a logical reason, no penalty, otherwise penalize. Call the production manager, whoever is responsible for variable load, mostly the production head. FOH also production head. Labor rate, maybe the HR team would be asked, or the manpower manager. Labor efficiency, production. So you will call the appropriate person, understand from them what has gone wrong, what has gone right, and then fix responsibility. Then you will have to fix responsibility for these people. Ask them what has gone wrong, what is the problem which has happened. This is the purpose of doing the reconciliation. We can do a profit reconciliation, we can also do a cost reconciliation. I hope this is done. Any doubts? Any doubts on this?
No, sir. No,
Okay,
sir.
okay, let's proceed ahead. Let's come to 44. Again, focus will be on getting computation table. Following information is available from the cost records of a company for the month of July 2016. Material purchased, material consumed, actual wages paid, fixed factory overhead incurred, fixed factory overhead budgeted, standard rate and prices, direct material SP is given, input output ratio is given, SR is given, standard equation is given, SR per hour is given. You are required to calculate the following variances. So material, labor, fixed overhead. Exactly 10 minutes for you. Get me the computation table for material variance, labor variance, fixed overhead variance. Three variances. You will have to get the computation table. No variance calculation. 10 minutes. Start doing it. Start doing it. 10 minutes for you to do this. Do the computation table. 10 minutes for you to do. Start doing it. Most of it is readily available. I think one or two items you may have to calculate. We are not going to calculate variances. Focus is on the computation table. This should be your material variances part. I hope you're getting this. Material variances part. Computation table is over. Labor part. We do FOH. I'll copy paste SH and EH. Material and labor you can check in case there are doubts here. Material variances, labor variances. These two you can check. FOH, SR is 8, SH is copy pasted, AH is copy pasted, budgeted fixed overhead is given in the question, actual fixed overhead is given in the question. Any doubts on the computation table? Focus is getting that. I've done the table for even FOH variances. Any doubts on this? Material done, labor done, fixed overhead variance table is also done. I hope we can proceed. Anyone still doing the tables, please let me know. Focus is getting the tables correctly. Anyone still doing this, please let me know. Given you 10 minutes. Hope you have completed. Only part was this AQ is quantity consumed, not quantity purchased. So some of you could have taken 22,000, which is wrong. 21,000 and AP needs to be calculated. 90,000 by 22,000. We had to do the calculation. Otherwise, almost everything is readily given. Assume you're done. 45 is homework. Now listen, whenever a problem like a comprehensive question comes, please check what is needed. In this question, don't try to do the entire computation table. Material cost variance means first column, last column. Labor cost variance, first column, last column. Fixed overhead cost variance, first column, last column. Variable overhead cost variance, first column, last column. So no point in doing the entire table, or no point in even doing the table. You can directly also calculate. That's your wish. But whenever you do an exam situation problem, please check what is needed. So this is a homework, but the question is asked only for cost variance, no breakup. Last problem, if you see, they've asked for everything, so you need the breakup and all. But otherwise, in this question, you see only the variances are directly calculated. First column, last column, first column, last column. That is what is needed. 46, I'll do it in the next session. It will take a little bit more time. Go through 47. Go through 47. Okay, let's go through this. Again, they've asked for all possible variances here. Uh, SP Limited produces a product Tempex which is sold in a 10 kg packet. The standard cost card per packet. The reason for doing this question is only because of this. It is not per unit. It is per packet, and one packet is 10 kg. So the input output ratio is 10 kg is to 10 kg. Input is 10 kg, output is also 10 kg. It is not 10 is to 1. It is not 10 is to 1, it is 10 is to 10 because they have given standard cost card per packet. Labor 8 hours is equal to 10 kg. 8 hours is equal to 10 kg. SR per hour is 50. Standard price is 45. Variable overhead 8 hours is equal to 10 kg, and this is 10 per hour. Fixed overhead, they have not given the breakup, but we will write it. You can write this 8 hours at 25 per hour. This is to solve the question. It's not given in the problem. Basically, this 200 is nothing but 8 hours at 25 per hour. Variable overhead 8 hours at 10 per hour. Direct labor 8 hours at 50 per hour. Variable overhead is 8 hours at 25 per hour. At 25 per hour. Budgeted output is 10,000 kg. Actual output is 9,000 kg. Actual cost is given. We are again going to get into computation tables. We'll start doing computation tables. Again, I'm giving you time 10 minutes for you to do, not 12 minutes. Material variance, labor variance table, variable overhead variance table, fixed overhead variance table. One important thing, input output ratio is 10 is to 10. Equation is 8 hours is equal to 10 kg. 8 hours is equal to 10 kg. Start doing it. The input output is 10 is to 10 because the output is given in kgs. 9,000 kg into 10 by 10. If the output was given in packets, then the input output ratio is 10 is to 1. Then the input output ratio is 10 is to 1 because one packet 10 kg. 10 kg, 10 kg. So depends on how the output is given. Complete each of the variances. Material variances table is 2 minutes. Labor variance 2-3 minutes each of them. This is on your labor variances. Good part of comprehensive question is you can copy paste the SH and AH for variable over it. Copy paste the SH and AH. SR per hour for variable overhead is 10 rupees. 8 hours at 10. Fixed overhead is 25 per hour. 8 hours at 25. VOH variances. Your budgeted fixed overhead is 10,000 kg or 1000 packets is the budgeted output. 200 per packet. 200 per packet is the budgeted fixed overhead. With this, I'm done with the table. Uh, the chapter is also almost over. We have few more questions to be done, which I'll discuss it in the next session. If there are any doubts on this, let me know. It is kind of revision. Today's session was more like revising what we did earlier, the second part of today's session. Any doubts on the computation table? Please go through all the tables at home. Whatever question we have done the table, please do the variances and do the homework question. There is I think one or two homework question I've added today. So complete them, and whichever question we have done only the table, please calculate variances. That's more for your practice. If there are any doubts, let me know. Otherwise, I end the session.